So, good morning to everyone, and this is a good morning on a Saturday. Generally, we take our masterclass weekend sessions on Saturday evening, 5 p.m. But today, it's a slight exception. We're taking it on a Saturday morning, 10 a.m. This is the 13th of April. As always, in our weekend sessions, first we'll take a look at the sectors, the rotational graphs, and then I'll move ahead to take a look at your questions and the trades that can give us a move next week. So starting off with the Nifty first, we had a kind of a weak close yesterday on a daily basis. Let's take a look at the weekly chart first. Remember the slant divergence that we've been talking about for quite some time? It's just started to improve a bit. We have what we can call is a breakout, and the breakout has given us a throwback. Successful breakouts do not necessarily behave like this. Successful breakouts tend to stay up. Even if they give a throwback, they immediately reverse back on the upside. So this is a throwback. Yesterday's 234 points negative close was a throwback after the breakout. If this breakout is a successful one, or it has to turn out to be a successful one, then very soon Friday's high needs to be crossed. And by very soon, I mean Monday, Tuesday itself. Cannot take much time, because if you take much time, it's going to slip below that breakout level. That's not going to be a good sign. That's going to tell us that this breakout was a failure. That opens up possibility of an ABC kind of a correction. So this can turn out to be a breakout failure. Weekly charts trend still holding fine. Momentum, which was weak, just started to improve. Too early to say anything about it. A bit of a slowdown or choppiness which was there on the weekly charts. We experienced that throughout the daily time frame. All throughout this area it was choppy. Not even sector specific. I would say the market for the last few months were very stock specific. Right? Even within the same sector, half of them were gaining, half of them were not. In fact, down. So trading, especially short-term trading, will probably not be that easy, but fine, we're okay with it. We continue to ride that move, and we keep a cautiously bullish approach to the overall market. Bullish, of course, because of the trend momentum readings. Cautiously because of the volatility, choppiness, and the possibility of a breakout failure. If this turns out to be a breakout failure, then we will move on to a slightly bearish stance, or strategy will be more on the bearish side. Broader markets, CNX 500, mid cap, small cap, they were relatively less damaged in Friday's trade. But overall, if you take a weekly charts perspective, they have closed better. Look at how CNX 500 has closed on the weekly chart. These are proper breakout sustaining moves. The breakout has sustained. Take a look at the mid cap. The breakout has sustained. Take a look at the small cap. The breakout is not there as well defined. It is on CNX 500 and mid cap, but still okay. But then it tends to become a little dizzy when you see a move like this. You tend to raise questions back of your mind that how far can it extend? How long will it stay such strong? It needs to slow down, cool off, or probably give us a short-term correction. So the ones which have sustained well, small cap and the mid cap, especially small and mid cap both, tends to be little, stretched. And so we can expect a bit of a slowdown from this pack as well. You will agree with me that most of the momentum on the upside in the recent past has come from this particular pocket, the small and mid cap. And in the recent bounce back, also it's a small and mid cap which participated. So we need to be careful when we deal with the index heavyweights, and cautiously bullish stays the stance. Expect a bit of a slowdown or a corrective move coming forward next week. If Friday's low gets compromised Monday itself, if we see a negative move, then the possibility of further weakness opens up. You need to be careful. Amongst the sectoral charts, Let's quickly take a look at the performance first. So by that I mean I have the RRG graphs over here. And if I reduce this time frame from 10 weeks to, let's say we go down to 1 week, there you are. And if we sort it out, then we can see metals, crazy move, strong outperformance coming in continuously from the metals pack, and that's the biggest sectoral gainer. We'll work at the quadrant little later, which sector is on which quadrant, we'll work at it little later, but purely looking at the price performance, it's the real estate which also bounced back, oil and gas, auto did really well. These are the four main sectors which performed last week, a gain of more than 1%. The mid section is where you have flattish kind of a behavior. This is where all your consumer durables, mid cap, Nifty itself, Fin and all that lies. Towards the bottom, if I say take a look at healthcare and media. Now media does not matter too much, correct? Media does not add a lot of weightage to the overall market. Healthcare is down predominantly because of the sharp sell-off we saw in Sun Pharma in yesterday's trade. This one is primarily because of that. IT continues to find it difficult. I'm expecting some kind of a meaningful bounce back from the IT pack. It will come for sure, but to time it will be really important. So overall, the last week, it's been kind of a divided market, but good to see that index heavyweights, which comes in oil and gas, which comes in auto, banking right in the middle, finance, but metals, Tata Steel. So more or less it's up there. Now, if I sort the tail, and sorting the tail in terms of 1 week will not make much sense. It has to be at least a 12 to 13 week period. We should look at this rotational movement from a 2 to 3 months point of view. Okay, then it makes sense if you're trading the daily chart. If you're trading lower than the daily chart, it should be depending on what time frame you're trading. So it should have a decent amount of data so that you get the rotational feeling of it. Now, if I sort the tail now based on, let's say, 12 weeks, around 3 months on a rolling period, and you can clearly see it's oil and gas, auto, healthcare, and metal, right? I have sorted in terms of the tail. We want to know which are the ones in the leading and lagging and so on. So oil and gas, you can see that the graph is falling vertically, which means the relative strength, the momentum of the relative strength is cooling off. The relative strength per se is there. These are the situations where you look to buy on a dip. When you go to the chart of this particular CNX oil and gas, you will probably see an uptrending market which is now slowing down. Maybe range bound, or even if it's going up, it's not going up that much. So let's stick to that and let's first evaluate what's happening with the oil and gas. So oil and gas over here, I'm using the CNX Energy. If you check the sectoral indices, the CNX Energy, the CNX oil and gas are more or less the large caps. The heavyweights are more or less the same. So this is what is happening. It's kind of losing momentum of the relative strength. The strength, the relative strength, the momentum of the move, the momentum of the relative strength, which was there earlier, is now slowing down. That does not necessarily mean it can come down. It has to come down, not necessarily. One should look for buying opportunities here, especially at lower levels when the index goes oversold kind of a zone. These are the areas where one can look for buying opportunities. So keep an eye on OMCs, ONGC, NTPC, and of course, Reliance Industries. View on the energy, oil and gas pack is cautiously bullish like the overall Nifty because we have a slant behavior on the weekly. We need to be careful here. Longs, maybe, try not to chase longs. Try not to chase breakouts here. We don't want to get stuck in a false breakout. So let it come down. We can look for some swing pullback trades, or just you can avoid it for some time. But it's a sector which has relative strength. Same with auto. Now auto, you don't see any kind of a deterioration in the momentum either. So auto chart should be holding well. It should be. Let's take a look. There you go. See how beautiful it's holding right at the top. I don't see any particular divergences shaping up. The last time there was one, it did not fall below the low. So there's nothing strongly negative on the daily or the weekly chart. Continues to hold well. Every time it even gives a 1 week or a 2 week correction, it sharply bounces back. So auto stays positive. So RRG graphs and the charts are more or less in sync as of now, whatever we have seen. Healthcare was picking up momentum and relative strength. It's slowing down a little bit. Most of this damage actually comes from the highest weighted stock within the healthcare. And you know that's Sun Pharma. So CNX Pharma, let's take a look over here. And there you see this big fall that we've seen in yesterday's trade. It came from Sun Pharma particularly. Overall pack is range bound. The trend is there, the momentum is slipping, that's why it has gone range bound. Sell on a rise, look to buy on a dip is generally the mood of the pack. Few stocks like DV's Lab has given exceptional bounce back, but few stocks like of course Sun Pharma has come off. If you're there with me in any of these programs, you would know that I've been of the opinion that stay away from the pharma. It's not easy to catch by its tail. Cipla also is one stock which fell. So I would suggest cautiously bullish, of course, but there are signs of a topping out behavior. So I would rather wait. The question comes, why not short it? Because there's not much evidence to short it in terms of the trend, in terms of a pullback. Once it comes, we can take a call. And the fourth one, which is still in the leading quadrant, and if I increase this to, let's say, from 12 to 24 weeks, and if I take a look at the metal, especially metal, you will notice that the metal has been hovering right here between the leading and weakening. It's not actually kind of come down and gone to the lagging. It's not done that. If I animate this, this is the kind of feeling you'll get in the last 24 weeks. I'll play it again. Just take a look at how the behavior has been for the last 24 weeks. So it slips to the weakening and does not go to the lagging and continues to stay within the leading and weakening. When the RRG graphs behave like this gives you a feeling, strong sector, relative strength is there. All that is doing is coming down and bouncing back again. That's the kind of feeling. You will get to see that you should be able to see that in the metal pack. There you go. So that up and down of those RRG graphs between leading and weakening was because of this, and because of this. So every time it gives a correction, and these corrections are not shallow corrections. These are fairly steep, sharp corrective moves, and they have led to a bounce back. So metals at this juncture, strong, stretched. So it doesn't make sense to buy at this level. It doesn't make sense to even chase breakouts. But yes, even if it comes down and gives any kind of a sharp corrective move on the downside, like it has done in the past, ideally a pullback trader, a swing trader should not be looking to short unless you're a contra trader. So bullish, but don't go long at this juncture. It's too late. It's too stretched. So amongst the four sectors which are in the leading quadrant, auto and metals are the strongest. Healthcare, choppy, can show signs of weakness. Oil and gas is also okay. There can be some signs of weakness. So auto and metals, you'll not want to go short unless you're a contra trader. Rest, you can look for some signs of weakness. Coming to the improving. Now, this is the quadrant which I personally like, because from an improving quadrant, the possibility of moving to leading quadrant is higher. It can slip down to the lagging and again improving and lagging and then do this. But this is the spot wherein we can pick the next trend on the upside. Finance. It's a good news for us. Bank Nifty. It's a good news for us. Consumer durables, not that much, but Fin and Bank Nifty. The reason why I said it's good news for us is because these two pack cumulative weightage will be more than 40% of the overall market. This is where HDFC Bank, ICICI Bank, SBI, all of them are there. So should I just quickly animate the Bank Nifty and see how Bank Nifty has been behaving over the last 24? See how it starts to go to the improving but then fails again and now going back. I'll play that again just to understand. From lagging it goes to improving, then slips again to lagging, and then again it's trying to improve. Fin also will give you the similar kind of a feeling. There's not going to be much difference. So it's not willing to. So it's not willing to come down to the lagging and go all the way down here like this. So it's not losing relative strength. Please understand this. It's hovering right in this zone. So there's no loss of relative strength. It's just the loss of the momentum. Should we go and take a look at the Bank Nifty now? So Bank Nifty, remember, is trying to do a catch-up game. The Nifty went up to an all-time high much before the Bank Nifty. Then the Bank Nifty gave a good move. And what we have is a breakout on the Bank Nifty. Trend is pretty well established. So is the momentum on the daily and the weekly charts. To be very honest, these charts do not suggest any kind of signs of weakness, of contrarian nature. No, there is no sign of even a contra short. So if the auto, the oil and gas, the pharma, the metals ease off a little bit, because there are some signs of ease off, to maintain the index for proper index management more or less close to an all-time high, this pack can play a role. We have seen recently how Bajaj Finance and Bajaj Finserv had bounced back. And so we have to keep an eye on the HDFC Bank, which recently did well. iBank can tricky. I've never seen iBank behave such choppy as in the recent past. Kotak Bank, SBI, of course. So Bank Nifty financials keep a bullish approach, not a bearish. It's trying to improve and probably take us to the leading quadrant. There's another one, which is consumer durables. If I animate this, you'll see that it's been right at the center, not doing much. It's neither losing relative strength, so it must be choppy and bouncing back every time it comes down. But it doesn't have that kind of leadership as of now. So what we have seen is a sharp bounce back. You've got what we'll call as a breakout again. Last time it gave a breakout, it failed. Now let's take this example. Let me explain something to you. You have a breakout. The breakout fails. You have a pullback. The classic breakout failures are those where after the pullback it falls. So if I just put it step by step: breakout, failure, pullback, extension of the failure. This is where you will get the best of the moves on the downside. Similarly, the same thing happens upside down for a long trade. In consumer durables, the next extension never came. It just took up, right up there. And so you have another breakout. It's slowing down. It's a throwback kind of a behavior. Looks good. It doesn't look that bad. It looks tired. So consumer durables, I think one should stay bullish. Now we go to the weakening. These are the erstwhile strong sector which are now losing momentum of relative strength. The biggest sectoral gainer in the last 24 weeks, 63.4% CNX Realty. It's losing momentum of relative strength. Do not misunderstand this by the sector is falling. For all you know, if you check CNX Realty, maybe the sector is not falling. See? But wait a minute, the CNX Realty is up there. How come this chart is down like this? That is because we are calculating relative strength vis-a-vis CNX 500. Again, very, very similar to consumer durables. You have a breakout, which is kind of holding. There are a bit of signs of divergence. So I expect this pack to cool off and give a retest of this. Stay away from it. It is stretched for a long trade. For a short trader, you can look at contra short. Why you can look at contra short? There is some evidence on the reality chart and there is some evidence on RRG graph also. Small cap is again the same logic. Wait a minute, the small cap gave such a phenomenal move, but when it comes to a relative comparison with the CNX 500, it's actually losing a little bit of relative grounds. So I would suggest stay away from that also, and the mid cap. Coming to the end, towards the end, media, you know I'm not a big fan of this pocket at all. FMCG can be interesting. Consumer durables is doing much superior than FMCG, but I'll spend the next few minutes talking about IT. I'll animate this and you'll see how the behavior of IT has been. So as you can see, it was there in the leading, but it could never pick up from there. It couldn't. Means it was gaining some strength. Let me animate it one more time. See? So it went back, but it just couldn't break out. And if you go to the CNX IT chart, you will see what I mean is this area. It picked up, but it couldn't extend further up. It took itself down. Now, trend momentum are down on the weekly time frame. Range bound behavior on the daily time frame. I'm of the opinion that stocks like Infosys should support and give us a bounce back. It's struggling. But will you go short? I think it's a little late to go short at this juncture on IT. these were better readings. We did attempt some shots in this area, I remember. So, long story short is, if IT picks up, if banks and financial picks up, or to be precise, if I should say first, if banks and financials pick up or don't lose their ground, IT hold on to that congestion. Even if the oil and gas, auto and metals cool off a little bit, it will not impact too much to the Nifty. Kind of a nice index management. In a outright bullish market, everything goes up. In an outright bearish market, everything falls. We are not in a bearish market, or there has been no such sense of bearishness in the market because there's been nice index management. So continue with the bullish, cautiously bullish approach. Look for trades predominantly on both the sides of the market. If you're not a contra trade, try not to short the market and wait for the trends to come off. And it's better to stay with the side of the underlying trend, right? All right, so that's it for my side in terms of the sectoral analysis. Now, like always, we will quickly take a look at which stocks we can focus to trade next week.